There's a different version of the VA loan that lives in the minds of sellers, listing agents, and even some buyers that is wrong in almost every important way. And because that version gets passed around like a fact, veterans lose deals that they should have won. So in this video, I'm taking on 7 of the most common VA loan myths, where they come from, why they're wrong, and what the truth actually looks like. If we haven't met yet, my name is William Ware, the Loan Cat. I'm a GWAT veteran, currently still serving in the Army Reserve, and for the last few years I've been a mortgage broker specializing in VA loans. And this video is part of my VA Loan Masterclass series where I break down the benefit in plain English. So let's get into it. So here's what we're covering today. 7 myths about the VA loan that sellers, realtors, and sometimes even veterans believe themselves, and the truth behind each one of those myths. If you've ever had a seller hesitate on a VA offer, or if you've heard something about the VA loan that just doesn't sound quite right, this video is for you. Myth number 1, VA loans take forever to close. This one has been around for decades and has not aged well. The idea that VA loans are slow comes from an era when VA appraisals were harder to schedule, processing times were longer, and lenders were not as experienced with the product. That is not the reality in today's market. A VA loan with a prepared borrower, a clean file, and an experienced lender closes on a timeline that's competitive with conventional and FHA loans. In many cases, that means 30 days or less. The loans that close slowly are not necessarily just because they're VA loans. They're slow because the file was not prepared properly, the lender might not do many VA loans, or there may be underwriting conditions that weren't addressed early on. The VA loan is typically not the problem. The problem usually comes from lack of preparation. Myth number 2. The VA loan is harder on sellers, and this one does the most damage of all. The belief that sellers are stuck making repairs, paying extra costs, or taking on extra risk because of the VA loan has convinced a lot of listing agents to steer their clients away from VA offers. But here's the truth for sellers. Sellers are not required to pay any specific costs on a VA transaction solely because it's a VA loan. The VA does limit what buyers can pay in certain non-allowable fees, and in some cases that creates a negotiation around who covers what. But that's a negotiable item, not a mandate. The VA also requires that the property meet the minimum property standards, but a home in decent condition is usually not going to have any issues. The homes that generate repair requirements are generally homes that have created problems in any transaction. They just show up at the appraisal instead of during the inspection. A VA offer from a well-qualified buyer with a strong approval and an experienced lender is a good offer. Sellers who reject it based on myths are not protecting themselves. They're potentially leaving a clean transaction on the table, if not thousands of dollars. Myth number 3, you can only use the VA loan once. This is another one that's very damaging because it causes veterans to walk away from their own benefit. The VA loan can actually be used multiple times throughout your lifetime. As long as your entitlement has been restored, either through selling the previous home and paying off the VA loan, or through the one-time restoration process, you can use the VA loan again. There's also a concept called remaining entitlement, and that remaining entitlement allows some veterans to have 2 VA loans at the same time under certain conditions. And we have a full video in this series dedicated to entitlement, restoration, and using the VA loan more than just once. But the short answer is, one and done is a myth. Myth number 4, the VA appraisal is the same thing as a home inspection. So we briefly touched on this one in the last video, but it's worth saying clearly here because it can cause real confusion. The VA appraisal has 2 jobs, and only 2 jobs. Number 1 is it's used to estimate the market value of the property, and number 2 is it notes any obvious conditions that don't meet the VA's minimum property requirements. That is not the same thing as having a licensed home inspector go through every system, every component, and every potential defect in the home. The VA appraiser is not checking the HVAC filter. They're not running all the faucets. They're not testing the outlets. They're just doing a value assessment and a visual review of obvious conditions. Veterans still need a real home inspection. The appraisal does not replace the home inspection. Myth number 5, 0 down means 0 cost at closing. This one stings because veterans hear zero down and sometimes assume that they can show up to closing with nothing. Well, zero down just means that there's no down payment requirement. It does not mean that your other closing costs are going to disappear. There's still going to be lender fees, title fees, prepaid items like homeowners insurance and property taxes, and potentially the VA funding fee, depending on your situation. Now, there are some really good strategies that you can use to reduce or offset closing costs through seller concessions, lender credits, and other negotiated terms that can help. And in some transactions, veterans do get to closing with very little to nothing out of pocket. But that is a result of strategy and negotiation. It's not a feature that comes automatically with a VA loan. Zero down is a powerful benefit, but just make sure that you understand what it does and does not actually cover. All right, myth number 6. The VA loan is only for first-time home buyers. No, there is no first-time buyer requirement attached to the VA loan benefit. Veterans, active duty, and surviving spouses who meet eligibility requirements can use the VA loan regardless of whether they have owned a home before or not. This myth likely comes from the association between low down payment programs and first-time buyer programs. But the VA loan is an earned benefit tied to your military service, not to whether you have previously owned real estate. If you've used your VA loan benefit before and your entitlement's been restored, then you can 100% use it again. First-time buyer status is irrelevant in the equation. And myth number 7. A VA loan means that the seller has to make all the repairs that the appraiser calls out. This one is related to the myth number 2, but it's specific enough to address on its own. When a VA appraisal comes back with a required repair, it does not automatically mean that the seller is on the hook. Required repairs create a new negotiation. The seller may agree to make the repair. The buyer can just simply request a credit in lieu of the repair or a price reduction. And in some cases, the buyer can handle the repair before closing. And in situations where parties cannot reach an agreement, the buyer has the opportunity to walk away, written into the contract. The VA is not issuing a mandate to the seller. It is saying that the loan cannot close until the condition is resolved. How that gets resolved is up to the parties involved to decide. Sellers who understand this are a lot easier to work with than sellers who think that VA loans are handling them a repair bill the moment that the offer is accepted. Here's the bigger picture. Most of the resistance veterans face when it comes to using their VA loan benefit comes from misinformation, not from actual problems with the product. A well-prepared VA buyer with a clean approval, a knowledgeable realtor, and an experienced lender is a strong buyer. The myths exist because the VA loan is less common than conventional financing, and people tend to fear what they don't understand. The best thing a veteran can do is understand their own benefit better than the person on the other side of the table. And that's what this series is built to do. So, let's bring everything together. VA loans can close just as fast as conventional loans when the file is prepared properly. Sellers are not automatically on the hook for repairs or extra costs. The VA loan can be used more than once in your lifetime. The appraisal is not a home inspection. Zero down does not mean zero closing costs, and there is no first-time buyer requirement. Additionally, required repairs are a negotiation, not a mandate. So if you're a veteran getting ready to make offers in a competitive market, understanding these myths and being able to speak to them can make a real difference in how your offer is going to be received. If you have a realtor who isn't very familiar with VA loans, share this video with them because it may save a deal. The next video in this series is going to cover how to craft a VA offer that competes and wins. We'll get into price terms, strategies, and how to position a VA offer so that the seller sees strength, not risk. And I'll see you on the next hole.